Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date, March 11, 2015. I'm going to take a look at the euro versus US dollar. I'm going to build a case for a correction, believe it or not. Let's take a look at it. Let's start off by taking a look at the hourly chart. And what do we know from the hourly chart? Well, we know this. So if we go back in time and we take a look at the month of February, this was a non-trending type period. Since February 26th, to be exact, the market has trended to the downside. That trend to the downside has taken the price from this high right here to this low right here around the 106.67 level, about 711 pips or so to the downside. That's a pretty big move. How many days did it take to get there? 1, 2, 3, 4, 5, 6, 7, 8 trading days. About 700 and let's call it 720 pips in 8 trading days. That's about 90 pips per day to the downside that we've gone in the euro versus US dollar. That's a pretty good move over a 2-week period, wouldn't you say? So maybe the market's ready for that. Now let's go back up to this high right here. I'm going to take a look at what happened at the high. And when we look at the highs right here, what did we do here? Right at the end right here, we had this false little break to the upside right here, right? And the market failed up there, and then it started this move to the downside and started unraveling. That unravel started to take the price below these lows right here, and things really started to get going on the downside right there. And that's what really got us going in our trend move to the downside. Now let's go to the 5-minute chart here. And on the 5-minute chart, I'm going to show you another little trend line here. This trend line connects the most recent lows, and our last or the first 5 minutes of trading today at 5 o'clock, we saw the market move sharply to the downside in the first 5 minutes, and then the next 5 minutes we moved down to and through that trend line right there. You see this little tail right here? You see how it left this move right here at the low, falling below the trend line? Looked very similar to that hourly chart, right? And we started to get this move back to the upside of the last few hours of trading, and that is more, maybe it's saying that the bottom is in place. The market exhausted itself and now ready for a move to the upside. What other things are we seeing here on this 5-minute chart? We've seen the market come up to the 100-bar moving average. That's the blue line in this chart, and we've moved above that moving average line right here, right? Is that bullish when we move above a moving average? It sure is. The moving average is also starting to go a little bit sideways right here. Is that a little bit more neutral? It sure is. Now you're going to say, well, Greg, we went above the 100-bar moving average here and here and here in just yesterday's trade, and that is true. And that's why I'm going to be a little bit cautious about this 100-bar moving average. And that could be a risk-defining level for me on any sort of long right here. Stay above the 100-bar moving average, and things are looking better. If we go below those levels, things might not look so great, right? And I have to protect myself because what are we in? A trend move to the downside. And what am I proposing? A correction, a counter trend type move. And that's coming from someone who wrote the book, Attacking Currency Trends. So I'm trying to attack the counter currency trend here. So I got to be careful. I got to make sure that I don't get for lack of a better word, screwed because the market trends the other way. I have to define my risk and limit my risk in case I'm wrong in this bottom. And so one of the levels I'm going to watch is this 100-bar moving average. The other level I'm going to watch right here and really use as my stop is this level somewhere around the 106.90 level. I'm going to call it the 106.90 level. And if we look at these lows right here, a low, low, and a low, we found a support floor here where the market was finding support. Over here we found a higher low, and we started to move a little bit higher until the first 5 minutes of trading here where we broke through it and we made our way to the downside. Look what happened when we came back up to that old floor level. It became a little bit of a ceiling here. We had a little retracement, and we moved back above that level, and what was once a floor and then a ceiling now becomes a floor again. So we're going to be watching this level at the 106.91 level as our support level. Finally, if I take a Fibonacci retracement, put this low here to the high right here, 50% retracement comes in at 106.91. I've defined my risk. I don't want to see the price move below the 106.90 level, folks. That's my risk on this trade. As long as the price remains above that 106.90 level, I'm going to give a chance for a corrective move to the upside. If it moves below that level, I'm getting out. I'm going to reevaluate the position. I'm going to reevaluate the idea that maybe we've hit a low for this euro versus US dollar. Let's add a little bit of another level of reason why I think maybe the low is in place. And I'm going to go back to the last time the market traded at these levels. You have to go all the way back to 2003, don't you? We know that for a fact. And if I go back to that level, the area in 2003, the last time the market traded at these levels, I put in a line today at the 106.65 level. And if I go back to this period right here and put a line across right here, you can see that there are a number of different lows that came in right around this area, around the 106.65 level. And then we broke through that 65 level and we started to use that level as a ceiling right here. It got a little bit above it, and this high came in around the 75 level. This high came in around the 78 level. But for the most part, the market between the 65 and 78 level was finding support, then finding resistance, and then we started to find support again until this day right here, the last day when the market fell below that 106.65 level. And what did we test right here? The 100-day moving average. And back at that time, I bet you I was saying that if it holds this 100-day moving average, we have the potential, and get back above the 106.65 level, the market has a potential to move higher. And indeed it did. It tested the 65 level through here, and that was the last time we saw the 106.65 level. Besides that, well, not today, we only got the 67, was at this point right here. And so there's another reason why I think that low is in place here for the euro versus US dollar. We went down to a support level way back in 2003. Maybe, just maybe, that low is in place. The final thing I'm going to take a look at, and this is something I never, ever, you'll hardly ever see me put this on a chart, but I'm going to put the RSI, the 14-bar RSI on the chart here. And what we see here is this trend move to the downside. This is a weekly chart. And the RSIs through here are each successively higher RSIs. We reached another low here today, in trading here today, and the RSI came in around the 16 level. This low comes in at 1556. This RSI comes in a little lower than that at 1521. So we have successive lows, lower lows, and higher RSIs. That's diverging RSIs. That's just another reason. It's not my reason for doing this trade, but it's a secondary reason why I think perhaps the market has a reason to move higher from here. So where can we go for this this move to the upside? And that gets starts to look at our targets. We know where our risk is. We don't want to see the price move below the 106.90 level. What are our targets on the top side? And if we take a look at the 200-bar moving average here, that currently comes around the 107.25 level. If we go to this yellow area right here, we had a number of lows in between the 107.25 to 33 level. We had a low here, 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 and then we broke through that low. And that 25 level became what? Instead of being our floor, it became our ceiling. We have an understanding that this 107.25 level is a level where there's a lot of option expiries tomorrow. So we may not see the price move or might have some problems getting through this 25 level. But if we're able to get above that 25 level, get above the 33 level on the top side right here, it should be smooth sailing to the upside, above the 200, above this support, which became resistance, and that would open up the door to the upside. Now the risk right here is around the risk here on this trade versus here is about equal, but we do need to see the move. So we do need to see the move, the price get above that 107.33 level to have a chance for a further upside potential. But that is a possibility, and that is a trade here. I'm willing to make to take the bet to say the price has reached the bottom at the 106.67 level for the time being, and that the move back above the 100-bar moving average and above, and if we're able to stay above the 50% retracement, that's going to be our key in trading here today. As long as we're able to do that, then we have the potential to move higher and make new highs, maybe up to the 78 level, maybe even up to the 107.86 level, and who knows how far we can go from there for the euro versus US dollar. I'm not saying that we're out of this, out of the woods yet for the euro versus US dollar. Over longer term, we're going to go lower. We're probably going to go down and test that parity level, but I'm just thinking perhaps we're due for a little bit of correction. My name is Greg Michaelowski from ForexLive.com. Good fortune with your trading. Bye-bye now.